Welcome to Sky Broking Equity Weekly Market Commentary. Disclaimer: this weekly market commentary is for information purpose only. Before taking any decision, consult a financial advisor. Now let's see the fundamental analysis. Checking out the global cues, the US non-farm payroll report will confirm that the labor market remains strong. The consensus estimate for jobs created in March is 450,000, which would be a decrease from the 678,000 gain in February. Next, negotiations are continuing with Ukraine but appear to be making little progress. The decision last week to insist on purchases of Russian gas to be made in rubles. It goes without saying that the focus this week will continue to be what's happening in Eastern Europe and what the European Union is doing in order to reduce its reliance on Russian energy and allow it to impose more severe sanctions. The latter is unlikely anytime soon, but the US LNG deal was a step towards it. This week offers an abundance of economic data, with the standout being flash inflation indicators. The Eurozone flash CPI on Friday will be the one to watch. Next, China COVID-19 continues spreading in the mainland, raising the threat of lockdowns impacting manufacturing and logistics. Checking out the domestic cues, India releases its balance of trade on Friday, which could show the impact of higher oil prices. As a huge net energy importer, and with the central bank continuing its reluctance to hike interest rates, the INR remains near the weak end of its range. A sharp rise in oil prices or the US yields next week could spark more INR weakness, which could also see hot money exit the Sensex. So these are this week's fundamental analysis. Now let's move on to see the technical analysis. Nifty may expect a support near 17,001 ranges, and if May closes below 17,001 on hourly and daily basis, some more drop up to 16,446 ranges may expected. Bank Nifty has a close below 35,200 on hourly and daily basis, which means some more drop up to 33,615 ranges may be expected. So these are this week's technical analysis. Moving on to the derivative analysis based on the option chain analysis, highest open interest for call side is 18,000 strike and for the put side is 16,000 strike. Overall 2,000 points band and expiry is on 31st March. According to the PCR analysis, Nifty PCR OI has decreased with Nifty negative close, and when compared with the previous week, which shows call writing a scene. India VIX has settled in 23.43, and when compared with the previous week, it had ended with a high, which shows increasing the volatility. So these are this week's derivative analysis. Now let's check out the recommendations. Coming to the cash corner, buy Aura Pharma above 697.5, the target is 734 with a stop loss 667. By EI Hotel above 147, the target is 154.5 with a stop loss 140. Coming to the F in the corner, sell Nifty future below 17,150, the target is 17,050 with a stop loss 17,250. Based on the option strategy, long strangle by Nifty 17,250 call option above 120 and 17,050 put option above 90. The 31st March will be the expiry, and the total buy premium is 210, the target is 260 with a stop loss 160. Based on the institutional activity, according to the previous week, the FII net sellers were minus 5,344.39 crores, and for the March month, the FII net sellers are minus 46,961.57 crores. According to the previous week, the DII net buyers were 2,820.72 crores, and for the March month, the net buyers are 34,440.74 crores. So these are this week's Equity Weekly Market Commentary. For more market updates, join our Telegram channel and the YouTube channel. Thank you by Sky Broking.